The Nifty ended its 7-day losing streak today as the fears that had built up here up to yesterday about the US bond yields eased a bit because the US Treasury announced a buyback in long dated bonds. If you recollect, bonds, the 30-year bond had shot up to about 5.3%. But because this concerned the US Treasury, they announced a buyback program, and in that caused the US interest rates at 30-year to come down to 5.18. So the 10-year also eased from 4.7 to 4.64. So this move led to a broad rally across the US and the Asian markets everywhere, and Indian markets followed. But if you see that FIS today also sold 500 crores. So clearly they were not enthused enough by this overall positive sentiment to invest in India. And the reason for that was that Brent crude, because Mr. Trump announced a series of economic measures against Iran now, and so Brent shot up to 94.54, and hence I think FIIs excluded India from their positive buying spree. Still, the markets, Nifty as well as the mid cap, small cap, micro cap, all ended positive, somewhere between 40 basis points to 60 basis points. Narrow, but a broad positive, broad all green, right? The reason for this was domestic support. DIS bought about 3,500 crores, which is the third consecutive day of solid buying. And the NIDI also entered after yesterday's panic. Today you saw advances declines was 1,850 stocks advanced and only 1,100 stocks declined. So clearly NIDI also participated. This helped the broader market recover, which means that the DIS actually ignored this whole Brent crude spike. Okay, so almost all the sectoral indices were in the positive except defense, which was about 20 basis points negative, right? So this I think is a very clear direction that the domestic were very worried about it, and today they seem to have ignored even a spike in Brent crude. That apart, the IT index showed a positive 2 days in a row, and I'm writing a separate article on the IT index. Please do read that. So, on that happy note for today, and one hopes that this sustains tomorrow, let me sign off today's report.